2022, very difficult year. S&P down, NASDAQ over 30%. How about a safe haven? Bonds, worst year in history. Heading into 2023, what do we see? What direction are we going in? We're going to look at the macro view and the charts. Let's go. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, I am a practicing financial advisor, a registered investment advisory firm. So what you see here, I do apply to our practice. We also do market updates like today, educational videos, and we just put out a podcast starting late in the year. Next one coming out this week. So do consider subscribing. So as I mentioned, 2022 was a very difficult year. Really nowhere to go. A lot of volatility, ups, downs, but the market is still in a downtrend. So as we head into 2023, halfway through the month, quick recap on 2022. We're going to talk about what we see from a macro standpoint, where we see it for the next 6 months, what those charts are telling us, and what direction we're going. So, starting out, let's go to the big board. All right, kicking things off, as a reminder, 2 pieces to our process. We look at the macro. That's really the basis of our process. And then we look at the charts. The charts are momentum, right? This market is driven by momentum and also because of algorithms and how things trade today. So you have to be mindful of that. So the first thing, as I mentioned, let's go back before we go forward. NASDAQ, you can see it, right? Pretty definitive downtrend, down 33% in 2022. Then you've got the S&P down just about 20%. Now, it wasn't down as much because you had some sectors within the S&P, right? NASDAQ is tech. S&P has several different sectors. You had an oil sector was up over 60%. Healthcare, utilities, pretty much flat last year, which is why you saw that 20% downturn, okay? But really one of the biggest issues we faced last year was bonds. Now, these are 4 of the most traded ETF bond funds that most people use, myself included. You've got AGG, IEF 7 to 10 year, 20 year, and then 30 year, okay? Might be difficult to see, but you're seeing losses in 12, 15, 31, 39% last year. Massive, okay? Absolutely unprecedented. Have to go back over 100 years to see that. And subsequently, okay, we had the worst year in history for traditional asset allocation. Not that we're like that. We're not a buy and hold firm, but the standard investor generally follows a 60-40 of buy and hold, and it was really a challenge last year. Not that it wasn't a challenge for us. So starting here, this is the macro side of things, all right? We look at 3 things: growth, inflation, and policy, all right? Growth, we are now in cycle 4, have been there since the beginning of the year. We made that call last year. Growth slowing, seeing that, we'll talk about that in a second. Inflation decelerates, not deflation where prices drop very quickly. Disinflation happens slowly over time. Now here it says Fed is dovish or anything but that, which is one of the issues we have right now, okay? So we're going to talk about the Fed as well. So first up, when we look at things, not too responsive today, here's the earnings picture. We peaked last year. We're going down. Now, I talked about with clients at a client-only meeting this week, Friday's the big day. I think we were pretty solid on the inflation number when really earnings kick off with the banks. Well, guess what? They were bad, okay? Citi is down 21% on revenue. The market was up. What happened? We're going to explain that in detail in a second, so hang in there, okay? So growth is slowing. Next up, we've got the inflation picture. Yes, we came in right on the screws at 6.5%. We are seeing some things going down. Rents and used cars specifically crashing right now are going to be helping us going forward, but you got a lot of items. Here's some pictures of eggs my wife took of how outrageous they are, right? A lot of sticky items, of course. Food being the biggest one of them right now, okay? So we'll see how that goes out. But the market's fixated on this. The pivot crowd, This is everything they care about when it comes to the overall market, okay? Next up, not sure why we're not being responsive today here, okay? So this came out the other day. Powell stresses need for Fed's political independence, okay? So basically what he's saying here is, this was a presentation this week, price stability is the bedrock, right? So they're not going to change. They're not pivoting, okay? Study came out this week. 17 of 19 are looking at 5% or more this year. But 19 of 19 said they are not going to lower rates in 2023. Yet the market, the pivot crowd, does not believe the Fed because they've lost credibility, okay? So here's a slide from our friends at Hedgeye. All right, this shows the 1970s. Now, at this time, finishing a book right now, Paul Volcker, the architect of the 80s inflation issue, right, the Fed chair at that time. Before him was Arthur Burns, okay? So this is Arthur Burns over here in 74, raising rates, but stopped, pivoted. What happened? It even went higher, okay, to over 14%. This is what the Fed wants to absolutely avoid, okay? That's why there's not going to be a pivot, yet, of course, the market does not believe them going forward, okay? So what I talk about here is forget the narrative, focus on the data, okay? The first thing you look for when it comes to the Fed is the 2-year Treasury. Look, pretty much within a very tight range. Ended Friday 4.2 to 4.4. So that tells you that's where the Fed is now, okay? If, in fact, they were going to pivot, you would see the 2-year starting to crash. Not happening. The next thing is the yield curve, 10-year minus 2-year, okay, Treasury, and this shows you when recessions come. Has always been right over the last 60 years, okay? On Friday, we hit negative inverse, so once you go invert below 0, it's predicting a recession, negative 0.73, okay? So this is the data. It's not changing, and we're anticipating this cycle 4 through the first couple months. Will we change? We'll talk about that in our next section. Let's go check out those charts. All right, so thanks for watching. If you like what you hear, make sure you do subscribe. All right, hit that like button. That's helping us as well. And don't forget, we got that podcast coming out. So first thing we do is let's look at the long view on the charts. This is your S&P monthly view. Pretty obvious we're still in a downtrend, okay? There's a couple things here. You've got your 12-month moving average. We're still below it. Now, probably above it as of today, but month end is what's important. But down here is momentum. Been negative for quite some time. So we're still in that downtrend until proven otherwise, okay? So let's take a look at our next chart. All right, so this is the short-term chart. Now, I look at things in 3 different ways. Short-term, 1 to 3 weeks. Then mid-term is 1 month to 3 months, and then the long-term view, okay? But right now, the short-term is kind of what's really driving everything. So there's a couple things here on the short-term chart I'll point out. Right, obviously, we're in a downtrend, and there's 2 things here. Hopefully, you can see in the line. There's 2 lines here that are really important. Red is your 200-day moving average, okay, of stocks. But then you have this blue trend line. It is definitive, okay? And as long as we're below that trend line, we're still in a downtrend. Now, once again, all right, we poked up against it on Friday. Let's see what happens next week. So I talked about the backdrop here on earnings, but the market's been up for the last couple days. So I'll try and explain this as simply as possible. All right, and I'll pop up some charts as well. The last 2 days, we've had a massive move in the option market of ODTE. Zero dated, traded, execute, basically 0-day call options, meaning day of call options. Unprecedented, incredibly volatile, okay? On Thursday and Friday, had hundreds of thousands, I'll put up a chart here, of call options, at S&P 4000 and SPY, the S&P ETF 400. So what does that do? That's going to drive the market up, okay? Couple things, because the people on the other side of that have to hedge that, and they have to buy the SPY, okay? And at the same time, volume goes down. Volatility, okay? So this is what's happened the last 2 days. We've seen this before, And eventually it's going to spring back to the other side is what we believe, okay? We still see downside from here, but that being said, if we break above, we'll go, okay? So that's what's going on in the short term. Again, still in a downtrend. We talked about the NASDAQ, still down over 30%. I've had a little move here in the last week. All right, we'll see what happens from here, okay? And I look at new highs minus new lows. This is NYSE. And yeah, we actually see a little yellow for the first time in a long time. Had some big numbers back in 21, excuse me. But if you look here closely, and we had 98 higher lows. That's not really a big, powerful move. So we'll see. Again, I still feel we're in a downtrend. We'll continue that way. But let's take a look at Sector Spotlight. All right, so first up with our call, right? We're not in high beta, okay? High beta is tech, large cap growth, anything high beta, right? So we're looking for some other alternatives. So one of the big things we started adding in our themes for this year is precious metals, okay? So the first thing is gold. We started adding back in November, okay? You can see that move, that price move. It's been really good. One of the problems is, as you look up top here, we're overbought right now. So it is not giving the bulls a chance to buy more in. So for me, I look at gold as a currency. I'll go as much as 12% position. But when you see that move like that, you've had barely any down days. You look for an entry to buy more, okay? But that uptrend is confirmed, okay? And as we go forward, I'm gonna look for a pullback to add some more. Now, when I talked about having precious metals as our theme for the first few months here, okay, there's a lot of different areas you can go. You've got gold, you've got silver, okay? Now, again, gold currency, silver commodity, platinum commodity, okay? Then you have the miners, okay? We own gold miners as well. You can see that chart. That's done very well. Also, looking to add silver miners, okay? Besides gold miners, we have gold miner juniors, okay? So a lot in that space to add, not fully allocated yet, but we feel going forward this is going to be one of our top opportunities. We also have some healthcare names, okay? And then the other big thing that we're looking at right now is China, okay? Now, obviously with what's going on, they have finally opened up, all right? So you see this move down here to the upside. Now, I've really haven't done much here, kind of waiting. I added a small piece of Hong Kong this week, about 2%, okay? But I think because the reason is we're overbought. So as we get a pullback here, I'll probably look to add some more here. When I look at the cycles, okay, like I said, U.S. we're cycle 4, not good. China, if I show you the world, there's only one green, one that's going into cycle 1, and that's China, so that's the opportunity we see there. Okay, the biggest thing from here has been, and last year I called this my most important chart, still is kind of sort of, because last year it was so bad, right? This is the 10-year treasury, right? So yields go up, prices go down. That's why we lost money in bonds last year, although we were out for most of the year. Unfortunately, not in the beginning of the year, and you saw a lot of losses as you went forward, okay? But a couple things here. We've been trading in a range. I'm waiting. I'm trying to be patient because we've had these head fakes, right? We're going to go here, we'll go down. No, kept going up. Came down, we're going back up. So waiting here. The other thing I look for in the middle of the chart here, you see move. That's the move index, okay? That's the volatility index for the bond market, okay? So we did hit 112 on Friday, which is a really good number, okay? I'd like to see it below 115. We've been as high as 146 in the last 10 days, okay? So we'll see. I'm waiting for confirmation below this one line here before I start slowly adding, because again, I don't want that head fake where I'm going to get hurt again as we go forward. So next up, game plan. All right, don't forget, like what you're seeing, hit that subscribe, like button. Don't forget, podcast coming out this Thursday. So where are we? Some people call this the sine curve, and right, from optimism, etc. I talked about this last time. I think we're still in this area here. Denial, fear, maybe anxiety, okay? You don't really see a bottom of a bear market until you get capitulation and desperation, okay? If things play out the way we think with slower growth, okay, more layoffs, which we're seeing every day now, okay? We'll see where this takes us, okay? So the game plan, I think I was pretty clear, all right? Right now, we're looking at precious metals as a good place to be. We think China, slowly, if it sustains, you never know what's going to happen there, right? It's a very tough country because you can't always trust the data, but we'll see where they break out here as far as opening back up. And then, of course, bonds. Should be our biggest opportunity this year. If we see yields go down, okay, prices go up, that will be a big opportunity for us. But like I said, if for some reason we break above that trend line, then we'll go with it, okay? So, thanks for watching. Michael Loftus, Wealth and Wisdom TV.